One of the most common things I hear from business owners is that they don't know whether to pay themselves a salary or a dividend, and they often wonder what is the best for tax optimization. When we talk about tax optimization, it is the percentage paid in tax. So when we're looking at that, we're not talking about how much cash you get to keep after. We're talking about how much tax you paid in a percentage, and these are fundamentally different. Whether you are considering to pay yourself a salary or a dividend, you have to consider a few things here. One of which is you will be paying a corporate fixed tax rate. Now, if you're a small business, you make under $500,000, you will have the small business deduction, and depending on the province you're in, it'll land you between 11 to 14%. Anything after that, you'll be paying an enormous amount in the 23 to 27% range, which of course, then it becomes a no-brainer that you should pay yourself a salary. But if you're a small business, you still might consider paying yourself a dividend because you think that percentage corporate tax rate is low. When you pay yourself a salary, there are a few expenses you will have. You'll have to pay CPP, both for the employee and the employer side. Your EI, you can waive that. Don't ever pay EI. But you will have to pay the CPP amount. On the other hand, you'll be having a salary expense, which means that you will get a deduction on the corporate tax return, and you will save a percentage otherwise that would have been paid on that amount of the salary, that 11%, 14% on the salary. After that, on your individual tax return, you'll pay yourself the individual amount. You won't have any dividend tax or anything like that. But you will have the savings from paying yourself a salary. You'll have the additional expense for the CPP, both the employer and EI. On the dividend side, you don't actually have to pay a CPP or EI. You end up just paying out a dividend through the corporation. There's no expense on the corporation. There's no deduction in the corporation. It will flow into your individual tax return, and then you will have a amount owing. You'll have a dividend tax credit for that as well. You'll gross it up and have a dividend tax credit. Now, in almost all cases, when you do the math, it will be better to pay yourself a salary on a tax percentage optimization calculation. There's something you have to consider. When you pay yourself a salary, you get an RRSP deduction. You'll have earned income so that you can flow that earned income and do a contribution, which will save you a lot in taxes. These are things that you have to consider as well when you're paying out a salary. You're going to have that amount. So even though you'll pay the CPP, you'll have room to have and claim a deduction through your RRSP on the earned income. So overall, if you end up doing the most correct plan, which is pay yourself a salary, you end up paying the CPP for the employer and the employee. You end up taking the RRSP deduction, right? Because you can now contribute it. You have contribution room. Then you will have a lower tax paid, but you will have less cash on hand. And the reason why is because of the RRSP deduction. When you contribute to your RRSP, obviously you no longer have that cash on you, but it is your money and you will have it in the future, depending on what you're looking at. If you're looking at just I should end up paying a dividend to myself because I want to collect cash. I don't care about the actual tax percentage optimization. If I pay 20% in dividends, but it's only 17% in salary, I'd rather just not have the headache of doing a payroll as well, having the T4 filing. But if we're just looking at it through a tax optimization question, while taking into account everything that is beneficial of getting a salary, like the deduction for RSP, then it will be more optimal in most cases. If you want me to run through the math with you, let me know in the comments below. I can have an example of what that looks like in a comparison to a dividend and a salary. But from a conceptual thing, I hope I explained it well enough for you to grasp why a salary is better. If you like this video, make sure to like and subscribe. It really helps with the channel and gives me the motivation to continue giving you these videos for Canadians that are interested in tax. If you are looking for any tax help or an accountant, let me know. You can book a free consultation with us to see if we can help you with any of your needs. You can visit our website at www.ygadvisory.ca and let me know if you have any questions in the comments below.